Good morning. My name is Patrick Mutz, and I am the Managing Director of Image Resources. The audience today, thank you, all of you, for joining us. The last time we did one of these was back in February of this year, at the time when we were just completing construction at our Atlas project and starting the commissioning process. So I'll take up from right there and just suggest that now, across the last few months, we have successfully completed the commissioning process very rapidly through the month of February and March. And as of the 1st of April, we declared start of operations. So as of today, through the end of June, effectively, the second quarter of the calendar year, it was our first quarter of production at Atlas. And it was successful. Like at Boone and Aring back in 2018, 2019, we built the plant at Atlas very quickly, fairly much on budget and on schedule according to our forecasts, and started the process very quickly and ramped up to nameplate capacity just about the end of June. So about 3 months worth of work instead of 2 months to get to nameplate capacity as we did at Boone and Aring, but still a very rapid ramp up to full production. So when we look at this past quarter, which again is our first quarter of operations at Atlas, I think it's important to talk about one of the aspects of operations that threw us a little bit of a challenge, a little bit of a curve. I had reported before that Atlas is the first project to commercially utilize a technology called CT1 columns or spirals by Mineral Technology. It's a concept where this technology of a very much smaller diameter spiral column can take the place of the conventional, much larger diameter columns, and therefore the wet concentration plant has a much smaller footprint. We went into with blazing guns, expecting we would be able to make this technology work at Atlas because we had tested it very successfully at Boone and Aring in a pilot plant. And what we learned, though, unfortunately, was that as we started up operations and were getting some very good results for the first week, week and a half, 2 weeks, we then started seeing a drop-off of recovery, and we learned that there was some accumulation of organic root matter in these new technology columns that effectively interfered with the recovery and required that we shut them down to clean them. After a few tries, we decided that for this particular deposit, the Atlas deposit, this technology was not a good fit. So we enacted what I call our standby strategy or our backup plan, and we replaced those spirals with what I call conventional columns or spirals. And those have been in place now since May, and we're back on track, and we've got our recovery back in place and our throughput rates. And as I mentioned, by the end of June, we were actually very, very close to nameplate capacity. The other aspect of reporting on how this first quarter of operations has gone at Atlas is, of course, to talk a little bit about the production. And while the challenge with the CT1 spirals created a bit of downtime, a bit of lower recovery, overall, we still met our objectives. We ended up with a total of 3 shipments for the quarter and producing and selling 45,000 tons of HMC, which was pretty much in line with what the forecast was. So that's very important for a good, strong start. It's important that we continue to keep our production at this higher level now to ensure that we meet our market guidance that we've set for the calendar year. And at this point, we're maintaining that we can meet that guidance. When we think about the sale of 45,000 tons of HMC, as mentioned in our pre-quarterly report that we announced earlier this week, there has been about $22 million Australian received. So it means that it comes in at almost $600 per ton of HMC sold. The important part about our current situation is that we do have to sacrifice a portion of that revenue to pay for the debt that we took up as a prepayment facility that was used to cover the working capital for Atlas. And what that means is back in late 2024, our off-takers worked with us to provide us with a prepayment facility to cover the working capital for Atlas. And the concept is that we will repay that loan in delivery of HMC, and that the debt will be cleared by the end of December 2025. So it's a relatively short-term loan, but it is a high burden on revenue, roughly around 25%. But that's the path we've picked, and that's a path that's still going to work for us going forward. So when we start looking forward now for what's remaining in the second half of this year, of course, it's about steady state production, meeting our market guidance. But the other thing we're doing outside of Atlas, of course, is we're beginning the work now to finish a bankable feasibility study on the Yandanuka project, which is our next target. We have a bit of ways to go on that feasibility study. And the goal, of course, is that we finish the feasibility and secure the necessary financing to be able to build a project and have it up and running before we finish our operations at Atlas. So we have a continuity of operations. While we still have ambitions for also finish a bankable feasibility study on our Bitamina deposit, which would be a dredge mining project, that is still currently on hold or making slow progress towards looking at the permitting aspects in a feasibility study. And of course, we've got the McCall's project, which is a much longer term project. It'll be 50 years plus mine life once we peel the onion to the point of a feasibility study and secure financing. But that one is on a slow burn as well. I think the last aspect is that we are working on technology that we have patented regarding the production of synthetic rutile from our ilmenite. It's a new process. It involves the use of hydrogen. It is one that we're looking to build a pilot unit around and start testing. But again, it's on the slow burn right now, making sure that we keep our hands firmly on the operations at Atlas and the growth towards Yandanuka. And the final aspect, of course, is that we announced during the AGM presentation in late May, that we had done some gold drilling on our gold tenements. And we are in the process of currently processing the core that we collected from that drilling campaign, cutting the core and sending it in for samples, and we should expect assays back in perhaps in early September. And the idea is to look at whether the project actually does have value, given the gold price is in such strong territory today, whether as a separate development, which wouldn't interfere necessarily with our mineral sands ambitions, or whether we shop the project in order to support our growth projects within mineral sands. So after that, I just want to say thank you for attending today. We are going to be moving now to a question and answer session, so please do submit your questions if you have any, and I'm happy to answer them. Thank you very much. So as we start the question and answer session, I was handed a note that I may have quoted one number during my presentation that was not accurate, and I would like to make sure that I correct and put it in proper perspective. I believe I might have mentioned that our production of HMC for the quarter, which ended 30 June, and our HMC sales were 45,000 tons for the quarter. The correction to that is that the HMC production was indeed 45,000 tons for the quarter, but the actual sales, as was announced in our pre-quarterly ASX announcement, was 35,000 tons. So I think it's important I make that one distinction. It's sometimes speaking contemporaneously without notes, you can make that little bit of an error, but it's important to correct it. Now, as we get into questions, I want to also say that the full statistics, if you will, for the quarter will be available in our quarterly report, which is currently being drafted and will be published before the end of July. So that's a normal schedule. Now, the first question that I'm seeing, we do have a few available. Thank you very much for that. The first one comes from Brett. Brett is asking, does Image's experience with the CT1 spirals from Mineral Technology mean that the technology now is discredited? Brett, thanks for that question. The short answer is absolutely not, but let me expand on that just a little bit. While our experience with the Atlas deposit showed that there were some very fine root hairs or root matter that did get caught up in the columns and cause them to blind a bit and lose some recovery, that is very specific to this particular deposit. We certainly did not see that when we were operating at the pilot plant at the Boonenaring deposit, which, by the way, for perspective, is a deeper deposit. So it's not so close to the surface like Atlas is. Therefore, it's not riddled with the native vegetation root matter as Atlas is. So it's a very important learning point. It definitely does not discredit the technology. We were anxious to test it because we really have it as a target to use for one of our next projects in the future called Bitamina, which will be a dredge mining project. And a smaller footprint for the wet concentration plant means that the amount of equipment that has to be floated on a barge behind the dredge is less, so you have less overall total capital. And of course, the deposit, we believe, is deeper, and therefore it's deeper. It's from surface, but it's also deeper, and therefore it'll be clean enough to run. But we have to finalize the testing. So thank you for that question. I'm seeing the next question coming from John. John is asking, when will Image be in a position to offer a dividend to shareholders as it did in 2021 and 2022? John, that's a question that I have been asked by a lot of shareholders, and of course it's an important one. Image was in a position back in 2021 and 2022 with a very strong cash flow from our Boonenaring operations, and indeed we did offer a 2-cent per share dividend in both of those years. I think to answer the question, though, it is not clear. I cannot answer with a specific date, but I can say that at least what we have done in the past is an indicator that the board is always willing to at least look at the possibility of awarding a dividend when it makes sense to do so. As you've heard from my presentation and perhaps in previous presentations, we have a fairly ambitious growth program for investments in other projects in order to build our overall operating portfolio. So while we're doing that, it makes it a little more difficult to offer a dividend. But look, at least shareholders understand that Image is in that mindset to do so when they can. So let's leave that one where it is for now. And I hope it is sooner than later, of course. That means we're very successful. The next question from Robert. Robert asks, does Image have any plans to bring back jobs to the Gin area north of Perth, as it did in 2019 and through 2023? Again, Robert, short answer first is yes. In fact, the jobs started in the Gin area back in 2018 when we started work on the ground and had a construction for most of that period, and then operations from 2019 through 2023. The truth is that Image owns the land in that area, and we have to return for, number one, to finalize some of the rehabilitation that is still pending. And secondly, though, more importantly, in my view, is that our real plans for growth include, in due time, building a separation plant to separate our HMC into its various products. And that is the location that we've pinpointed as the best location for that processing facility, that separation plant, which would mean permanent jobs there for decades to come if we were to build it there. And in addition, we have ambitions to test and hopefully in the future build an SR production facility that would go on the backside of a mineral separation plant. And it too is slated to be located at the Boonenaring project at, north of Gin. So the answer is yes, and hopefully that will mean some long-term jobs in the area for many decades once we can get something like that built. But we have a ways to go to finish a few feasibility studies and testing programs, in particular on the SR. I tell you, great questions. I like these. The next one is from Amanda. Amanda is asking a very interesting question. She's saying, how is it that Image can build its projects for so little capital and can ramp up to nameplate capacity so much quicker than typical mining operations?
Um, we have heard that before, that people are questioning how can we do it so inexpensively, and then how can we indeed ramp up so quickly. Look, to be fair, number one, we have an excellent team, and so I'm very proud of that team, and I'm hoping in the future that continues to show itself to be very valuable to the company and therefore to shareholders. But secondly, we should recognize that in fact we are a smaller size operator, so we are building smaller plants. That's one of the reasons they're less expensive. And it's also one of the reasons we can ramp them up a little quicker, because they are relatively simple. But I don't want to underestimate the effort that goes into our design and our construction and our engineering and our operations, and that's what makes the biggest difference. The last thing would be that in terms of capital costs, we do make ready a use of used equipment. We did so with the Boone and Aring operation, and we did so in part at the Atlas operation. And we will do so in the future at our next target at Yandanuka. So those are our altogether important ingredients as to why we've been able to do what we have done so quickly. Amanda, thank you for that question. I think I have a few more coming. I've got one here from Forrest. Forrest is asking, are there any mine extension opportunities at Atlas? A very good question, and again, one we get from shareholders regularly. The short answer again is that yes, there are opportunities. For example, the Atlas deposit, the part that's permitted and operating at this point, is really only the bottom half of the deposit, the southern half of the aerial extent of the deposit. And so the northern section still has possibility for being permitted and mined. And we are looking into that. We had to leave it off the table in the first pass in order to get the permitting done a little more rapidly. So we are investigating that. In addition, we have two other deposits about 10 to 12 kilometers away from Atlas in that same area. One is called Hyperion and one is called Helene. We do have resources on the books in both of those. And so we are looking at whether or not we can set up either satellite operations from either one of those to extend the mine life, and the use of the capital equipment and investment that we made at Atlas for longer than just the current ore reserves are at Atlas. So again, a good question. Thank you for that. And the answer is yes. Just wanting to see if we have any other questions coming in. I think we probably have time for a couple more. Looks like I got one more coming. This one is from Young. Does Image have sales outside of China? And if not, when will they be looking to expand into more markets? The fact is that when we started production at Boone and Aring, we have operated throughout that period under an offtake agreement for material HMC to be sold into China. And that relationship has worked very positively for Image and for our off-takers for that matter. That continues through Atlas. In other words, that off-take agreement was written for both of these deposits for all of the material from production to be sold into China. But our ambitions are clearly broadcast in our presentation materials, in our quarterly reports, and that is under our Chapter 2 ambitions. We certainly do have plans, as I mentioned earlier in answering Amanda's question, about separating equipment, separating the HMC into multiple commodities. And at that point, that is one of the ambitions for doing so, is to be able to sell to a broader market and basically opening it up to a global market. And in particular, if we did the value adding with the synthetic rutile, of course, that again opens another market that's not just centric on China. And yet at the same time, if we meet our ambitions of multiple operations operating simultaneously, as we have ambitions to do so under our Chapter 2 strategy, we will probably also have some heavy mineral concentrate to sell into other jurisdictions at the same time. It doesn't have to all be separated if there's a market for just concentrate, for example. So thank you for that question. I think I've got one more here that we have time for. This one is from Bill. The question is, how confident are you in meeting the full year guidance despite the June quarter shortfall? Again, Bill, thank you for that. And look, when I made my comment at the beginning of this session for the question and answer session about the correction on the production, I mentioned that our production for the quarter was 45,000 tons of HMC. But it turns out, in fact, as was in our announcement, pre-quarterly announcement to the ASX, that's about 85% of what our forecast was. It was a little bit behind. And I assume that's what Bill is referring to as a shortfall. That is correct. That was in our announcement. And the answer is yes, I am confident. We actually made another adjustment to the wet concentration plant in early July, that added a few more of these new conventional columns to the mix to increase the production capacity just that little bit more. And that is done with an eye on increasing the overall production for the balance of the months and the years to ensure that we, in fact, can make up that production and perhaps even a little bit more. And therefore, yes, I'm still confident we will be able to keep our guidance intact. I believe that is all of the questions we have and have time for today. I'd like to close by saying thank you to our team for the fantastic work at Atlas. And I'll also say I'll close with thanking Spoke for the support here on the IR and PR for Image Resources. Thank you for attending. Bye.